Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, woohoo, and it's June 14th. We got a bit of economic news is here to go over. So we're going to start off with the Producer Price Index. It's the headline number for the month of May, and what that is, it's the wholesale number for inflation. So we had a negative number back in the month of April at negative 0.7%. We would figure it would come out of that and go up modestly at 0.1%, and it jumped up to 0.5%. So when you strip out the food and energy, it becomes the core, and this is kind of what the main number we look at. So the core, we had a 0.1% growth of inflation, and the forecast was to maintain at that 0.1, and it came in. So the core PPI came in at modestly at 0.1% growth, which is good because we want a little bit of growth when it comes to inflation because it means people are getting paid more, the economy is moving a little bit, but it's not getting out of control, so it's not going to jump up overnight your sudden expenses. Now, the next item here, we got the industrial production for the month of May. And April, we had a contraction of a negative 0.4%. We figured it was going to go upwards about 0.1%. And basically was at nil. So not too good a sign. Better than obviously contraction, but basically we were stagnant in the month of May. So April and May obviously weren't looking too good. Now we also have the consumer sentiment. Now this is the big news for the day. The PPI would be the second one, I would say, because PPI is not as important primarily because on the wholesale level, when you see inflation, even though the costs go up on the wholesalers, it doesn't always mean that they pass on the consumer. That's why when it comes to inflation numbers, they look more at the PCE as well as the CPI numbers. But we do want to keep a close eye on the PPI as to kind of gauge if possibly our inflation might go up on those levels. So on the consumer sentiment side, I'll get back to that for the month of June, we had 84.5 rating on the index for the month of May. Now, we figured it would have a slight tick upwards at 84.7 and actually dropped down to 82.7. So what this primarily means that people aren't feeling too good about things, or at least not as good as they were previously, the previous month. So that's something we definitely want to keep an eye on, as if people are feeling a little more negative about the economy and everything else, that means they may not be buying. If they're not buying, that means the economy is going to slow down a bit, and then we're not going to get the jobs creation that we desperately need. Now, last but not least, we had the capacity utilization for the month of May, and we had 77.8% utilization, and we figured that forecast remained the same, and it actually dipped down. So that means companies were basically less productive in the month of May versus with the resources that they had versus the month of April. So let's go ahead and take a look over at the headline news. And there's really nothing really to talk about except for the stock market, and currently the stock market's down so far this morning. Dow is down about 100 points, even though yesterday had a little bit of a rally. Now we'll jump over to the bond market. Now, we had a nice little rally yesterday, so we had a rally on both the stock market and the bond market, and a lot of that had to do with, I think, was the day before on Wednesday when both markets were going down, and that money, I think, that got pulled out of both markets, just kind of went back into the markets. But we had a really nice rally yesterday and closed above the 10-day moving average. Now, today we're also kind of continuing that rally, and we started the day up with a huge opening gap of about 25 basis points, and we're touching the ceiling at the approximately almost the 101 level. Now, we were up for the day, as you can see that by that wick, but currently we're down about 9 basis points. It would be feasible if we could potentially close that gap that we had open, and then hopefully maybe close up above that, up above maybe where we started, and we'll have kind of that starry effect. Now, that could mean it could go either way, but it also could mean that we could be breaking this reversal on the trend line, and hopefully maybe start a trend going upwards where we can have some improvement. But as of right now, rates have shown some improvement, so we are getting an improvement in the interest rates. Yesterday we had about half a point to the fees improvement from our in the pricing. So good news right there, and hopefully we can see that continue going forward. All right, folks. Thanks for watching. You guys have a wonderful day. Enjoy your wonderful weekend, and we'll see you guys back on Monday.